Welcome back to Investing Talk Podcast. Today we're tackling a question many of you are asking. Is Blade Air Mobility a good time to buy now? We've gathered insights from various sources, including investment and trading analysis reports from late July 2025, to help you understand what's really going on with this company. Our goal is, to sift through the data, highlight the most important points, and give you a clear picture without overwhelming you. Before we jump into the details of Blade Air Mobility, if you find this discussion helpful, please remember to subscribe, like, and comment on this. It really helps us bring you more insights. And if you'd like us to look into a specific company for a future show, just leave a comment below. You can also consider buying us a coffee if you appreciate our work.
Absolutely. And Blade Air Mobility, it's a fascinating company operating in a pretty unique space. We'll be exploring its core business, its financial health, how the market values it, the stock's technical movements, and what analysts are saying, plus, of course, the crucial risks and opportunities you should consider.
Okay, let's unpack Blade Air Mobility then. What exactly do they do, and what do the latest financials tell us?
Well, broadly, Blade Air Mobility operates in air transport and logistics. Their services are quite diverse. Think helicopter, seaplane, and jet charter across the U.S. and Europe. They focus on two main segments: passenger transport, often discretionary travel, and medical transport. And what truly distinguishes them, where it gets really interesting, is their specific niche within medical logistics, particularly organ transport.
Organ transport.
Exactly. This isn't just a side thing. It's a critical differentiator, a very specialized high-stakes area.
That medical logistics focus certainly sounds high impact, high stakes, like you said. But how are they actually performing financially? It sounds like a capital-intensive business. What about revenue growth? Profitability?
Good questions. Their trailing 12 months, or TTM, revenue is currently at $251.49 million. This shows pretty steady top-line growth, actually. It's up 10.44% from their $225.18 million revenue in 2023.
Okay, so decent growth, about 10%.
Right, a healthy increase. So yes, they are growing their revenue at a good pace, which is definitely a positive sign, especially for a company still in an expansion phase. However, on the profitability front, the company reported a net loss, about $26.57 million TTM.
Still losing money then.
Yes, but here's the positive takeaway. This loss represents a significant improvement. They've managed to cut their losses by over 50% compared to 2023.
Over 50%. Wow.
Yeah. So while they are definitely improving operational efficiency, getting closer to breaking even, they're still operating at a loss. It's an ongoing journey, not a destination they've reached yet.
So growing revenue, shrinking losses, that's a clear trend. But what about the future? Future earnings projections? And crucially, what's their debt situation look like? Or cash flow? Is this improvement sustainable, or are they just burning cash?
Right. The specific debt or detailed cash flow metrics weren't explicitly laid out in the sources we looked at. However, the narrowing of their losses does strongly suggest better operational efficiency, a more controlled cost structure.
Implying better management.
It implies they're managing expenses more effectively as they grow, which is key for sustainability. As for future earnings, their EPS, earnings per share, is still negative. It's -0.34 TTM. But looking forward, the EPS estimate for the next quarter is projected to be -0.04.
Minus 0.04, so very close to zero.
Exactly. That's a crucial number because it indicates projected continued improvement, getting very close to that break-in point. That's what investors really want to see. The trajectory is positive, even if the absolute numbers are still negative.
Okay, so trajectory matters here. But considering it's such a competitive, capital-intensive sector, what does this all mean for their industry position, their competitive advantage? They really need something special, don't they?
Precisely. And as I mentioned earlier, that niche medical logistics focus, especially the organ transport piece, is absolutely critical for Blade. This sector, it's characterized by potentially higher margins, urgent, non-discretionary demand, often long-term contracts.
So more stable than just charter flights for vacations.
Potentially much more stable, yes, and potentially more profitable. Blade's ability to secure and scale this could be their true competitive moat against larger, more general aviation players. This specific critical demand creates a very different kind of market dynamic. However, you always have to remember, the broader air transport sector is inherently capital intensive. Huge investments needed. And highly competitive.
Right.
So their ability to scale that unique niche while maintaining tight cost control, that's going to be key to their long-term success. building those moats.
Okay, that makes sense. But given that profitability is still negative, how do we even begin to value a company like Blade? Traditional PE ratios are out, right?
That's a great point. Since they have negative earnings right now, the standard price-to-earnings ratio isn't really applicable in a straightforward way, but we can look at the price-to-sales ratio, the PS ratio.
Okay, PS. What does that tell us?
Based on the data, the implied PS is roughly 1.38. That's calculated from their market cap, around $348 million, against their $251 million in revenue.
1.38. Is that good? Yeah. Average.
Well, for a growth logistics firm that's still expanding and moving towards profitability, a PS ratio in this range is generally considered quite reasonable.
Reasonable. Yeah.
You could interpret it a couple of ways, really. For you as an investor, maybe the market's still a bit skeptical about their path to profit, or maybe it represents potential undervaluation if they execute well on that medical strategy.
Yeah.
It basically reflects their revenue generation capacity relative to market value.
Got it. That gives us a different perspective.
Yeah.
But how does that reasonable PS line up with what the professionals think? What are
Yeah.
the analysts saying? Any price targets?
Yeah, this brings us to market sentiment and expectations. Analysts have an average price target of $6.25 for Blade.
$6.25.
Yeah.
And the stock's around $4.30 now.
Exactly. So that target represents about a 45% upside from the current price.
45% upside potential. That's significant.
It is. And if we look at, say, TradingView analysts, they're even more bullish. Their average target is $7.20, with a high estimate reaching $13.50, and even their low estimate is $5.
$13.50 on the high end. Wow.
Right. So this definitely indicates a generally bullish long-term sentiment among analysts. They seem to see significant growth potential and believe in the company's strategy execution.
Okay, let's pivot now from the financials and analyst views to the stock chart itself.
Yeah.
What's the stock actually been doing? What's the technical picture look like?
All right. Technically speaking, the current price is around $4.30, like you said. That's quite close to the upper end of its 52-week range. That range spans from a low of $2.35 up to $5.17.
So trading near the top of its yearly range suggests some recent strength.
It does suggest positive momentum recently, yes.
And what about key technical indicators, things like moving averages? Do they support that idea?
Yeah, if we look at momentum indicators, the stock is currently trading quite favorably. It's positioned above both its 50-day simple moving average, which is around $3.73, and its 200-day simple moving average, sitting at about $3.58.
Above both the 50-day and the 200-day.
Correct. And that positioning trading above those key moving averages is typically seen as a classic technical signal of bullish momentum. Suggests the recent price action is strong.
That sounds positive for momentum, but aren't moving averages sometimes lagging indicators? What about other things like RSI, and what does its volatility look like?
You're absolutely right to question that. Moving averages show the past trend. They are lagging. But when you combine them with other indicators, you get a better picture. The Relative Strength Index, or RSI, is currently at 55.77.
55.77, what does that mean?
Well, generally, an RSI below 30 suggests oversold, and above 70 suggests overbought. So 55.77 is kind of in that neutral to bullish leaning territory, healthy, leaning slightly positive. Now, volatility. The stock shows moderate volatility with a beta of 1.68.
Beta 1.68. So more volatile than the overall market?
Yeah, about 68% more volatile than the broader market on average. So for you, this means it could offer higher potential returns in a rising market, but also potentially sharper declines in a downturn. It's definitely not a low volatility play.
Right. Higher risk, higher potential reward territory.
Exactly. It has a noticeable upward trend recently, aligning with being above those moving averages. And trading volume is around 533,000 shares. That supports decent liquidity, meaning you can generally get in or out without massively disrupting the price.
Okay. Decent liquidity,
Yeah.
upward trend, but higher volatility. Good to know. What's the latest buzz around Blade? Any big news, upcoming events, catalysts that could move the stock?
Well, the analyst ratings themselves are a factor. There's a consensus, strong buy, based on 5 analysts covering it.
Strong buy consensus. That reflects optimism.
It does. It shows positive sentiment from the professional investment community. The biggest immediate catalyst, though, is definitely the upcoming Q2 2025 earnings announcement. That's scheduled for August 5th.
August 5th. Coming soon.
Very soon. And that report, plus the conference call afterwards, will be absolutely crucial. Everyone will be looking for updated guidance on their profitability trajectory. Can they keep narrowing those losses? Any sign of breaking even?
So all eyes on August 5th. Anything else major recently? Regulatory changes? Big contracts.
Our sources didn't point to any other major recent news or significant regulatory updates that would act as near-term catalysts. So yeah, those earnings are really the focal point right now.
Okay. Are there other potential catalysts beyond this next earnings report? What about insider activity or social sentiment?
Well, our sources didn't give specific insider buying or selling data, so no clear signal there on what execs or big shareholders are doing. However, general social sentiment around Blade seems to be bullish, anecdotally. That said, it's worth noting the broader market's fear and greed index is showing some fear right now.
So optimism for Blade specifically, but maybe broader caution among retail investors.
Potentially, yeah. A bit of a mixed picture there on overall sentiment. Beyond earnings, longer-term catalysts could include, well, continued expansion into that medical logistics niche we keep talking about, and also potentially broader international services. Successful expansion there could support sustained growth. And then, of course, there are macro factors. General demand for aviation, medical logistics trends, fuel prices, any regulatory shifts in air transport, those always play a role.
Right, the bigger picture stuff. Okay, let's talk risks. Every investment has them. What are the key risk factors for Blade Air Mobility that you need to be aware of?
Okay, risks. On a stock-specific level, the biggest one is the continued losses, the negative EPS. Pressure will definitely stay on the company if they don't achieve profitability soon and consistently.
That makes sense. Path to profit is key.
Absolutely. Then there are execution risks. Specifically, how profitably can they actually scale up that niche medical transport service? It's one thing to identify a niche, quite another to dominate it profitably and efficiently. That's a major challenge.
True. And what about industry-level risks? Air transport sounds tough.
It absolutely is. The whole aerospace and logistics sector is inherently capital intensive. We're talking massive ongoing investment in planes, infrastructure, tech, maintenance costs, acquisition costs, safety compliance. It all adds up.
Very expensive business.
Extremely. And it's also very sensitive to external factors. Fuel costs can swing wildly and hammer margins. Regulatory hurdles are constant. And it's susceptible to economic cycles. In a downturn, discretionary travel can just dry up, though the medical side might offer some resilience there.
Right, the medical part might be less cyclical.
Potentially, yes. Then, from a macroeconomic view, things like persistent inflation, changes in interest rates, even a recession, they could all hit demand for their discretionary services pretty hard. People cut back on non-essentials first.
Makes sense. And finally, what about risks just from the stock itself, how it trades?
Yes. Definitely. That beta of 1.68 we mentioned, that indicates above market volatility. So again, expect sharper price moves, both up and down compared to the overall market. It's not a smooth ride.
Higher highs, lower lows, potentially.
Potentially, yes. Think of it like less like a steady cruiser and more like a speedboat. Can go fast, but feels the waves more. And while the trading volume is decent for liquidity, that higher volatility means traders really need to be mindful of potential sharp swings. Manage that risk.
Okay, so bringing it all together then, what's the final assessment on Blade Air Mobility? Is it a buy now, and who is it really for?
All right, the synthesis. Based on our analysis of these reports, we'd give it a rating of, let's say, 7 out of 10.
7 out of 10. Why that score?
Well, it shows strong revenue growth, which is great. Losses are improving significantly, another big positive. It has that promising niche positioning in medical logistics, and importantly, analysts are quite bullish. However, counterbalancing that, it's still unprofitable. That's a major point. And there are clear execution risks around scaling that niche, plus those broader sector risks we just discussed.
So promising, but risky.
That sums it up well. For those looking to potentially get in, the analysis suggests an entry price range might be around $3.50 to $4. That's near or slightly below its current moving averages. Could offer a slightly better risk-reward entry point, given the volatility, maybe a bit of a buffer.
Okay, entry range noted. So who is this stock really best suited for? Long-term believers or short-term traders?
I'd say it's definitely better suited for long-term investors, specifically investors who are bullish on the company's ability to execute that growth strategy, especially the expansion into the unique medical logistics niche. You need to believe in that story long-term.
And short-term traders.
Short-term traders. I'd say they should really wait for clarity after the Q2 earnings. Those results on August 5th are key. Trading before that feels particularly speculative given the uncertainty around profitability.
Wait for the news. Makes sense.
And if you do decide to trade it short-term, after those earnings, maybe consider a stop loss around $3.50 to help limit potential downside. Of course, adjust that based on post-earnings volatility. For taking profits, perhaps look at partial profit taking near $6 to $6.50. That aligns with those consensus analyst targets, but again, heavily dependent on momentum and fundamentals after the earnings report.
Okay, so wrapping up. Blade Air Mobility is a growth stage company, promising trends, improving towards profit, but still in the red. Sentiment and technicals look generally positive. Analysts see big upside. But those risks, execution, sector volatility is significant. So it really sounds like it's for investors with a higher risk tolerance who are looking to maybe capitalize on that specific growth story and that unique medical niche.
That's a fair summary. The central question really is whether that medical logistics niche can truly lift Blade above the tough economics of the broader air transport sector.
What stands out most to you about Blade Air Mobility after digging into this? Is it all about those upcoming earnings, or is that medical niche the real long-term game changer?
For me, it's the potential power of that niche. If they can truly scale it profitably, it changes the entire investment thesis. But the upcoming earnings will give us the next crucial data point on whether they're actually making progress towards that.
Interesting. Well, that wraps up our exploration of Blade Air Mobility. We hope this look has given you some valuable insights and helped you understand the different angles on this potential investment.
And remember, this analysis is based on data available as of late July 2025. It's not financial advice. Always do your own research and consider your personal risk tolerance before making any investment decisions.
Thanks for joining us on Investing Talk Podcast. We'll be back soon with another topic to help you become better informed, faster. Until next time.